Global stocks rose in trading on Friday, after investors returned to buying shares despite the hot U.S. inflation data for the previous day, while traders remained apprehensive about the possibility of further intervention from the Japanese central bank to support the yen, with hopes of more Chinese stimulus. In looming time are major bank reports and U.S. retail sales data. Performance of some of the most popular stock indices today. The Japanese Nikkei 225 index rose in Tokyo to achieve a percentage gain of 3.25%, equivalent to 853.34 points, to close at 27,090.76. The Chinese Shanghai Composite Index, SHCOMP, also advanced, achieving a gain of 1.84%, equivalent to 55.63 points, to close at 3,071.99. The Hang Seng Index, SHI, in Hong Kong rose by 1.21%, equivalent to 198.58 points, to close at 16,587.69. By 10 o'clock Greenwich Mean Time, the Euro Stoxx 50 Index, SX5E, for all of Europe rose by 1.62%, equivalent to 54.32 points, to settle at the level of 3,416.72. The German DAX index also advanced, achieving a gain of 1.33%, or 165.64 points, to settle at 12,519.72. The Financial Times 100 index, FTSE 100, in the United Kingdom rose to achieve a gain of 1.23%, equivalent to 88.53 points, to settle at the level of 6,934.66. Global stocks rose, following their U.S. counterparts overnight, as investors sought to lock in gains. The start came from Asia, where the governor of the People's Bank of China said he will step up monetary policy implementation, and provide stronger support to the real economy, ahead of the all-important Communist Party Congress on Sunday, while the Japanese yen remained under pressure despite the brighter global mood. On Friday, Singapore's central bank tightened monetary policy for the fourth time this year and warned that more was needed to tame inflation. In addition, market players have been watching events in the UK, where the Chancellor cut short his trip to Washington to work on changing the mini-budget announced in September, which caused losses in global markets earlier. The British pound fell after a sharp rally on Thursday on reports that the British government may soon cancel large parts of its controversial fiscal plans. However, high headline inflation in the U.S. for the month of September kept investors cautious, bolstering expectations that the Federal Reserve will continue on its path to raising interest rates, even at the cost of pushing global economies into recession. Market participants are currently pricing in a 75 basis point hike at the November meeting, with another significant price increase likely in December. The quarterly earnings reporting season kicks off with a string of results from the U.S. banking sector, with J.P. Morgan Chase JPM, Wells Fargo WFC, Morgan Stanley MS and Citigroup C. Friday will also see the release of key economic data with retail sales for September, the October release of the University of Michigan Consumer Confidence Report, and Federal Reserve Governor Lisa Cook is also scheduled to speak later in the day.